CryptoCFOs podcast, we have Jason Meyers, the lead architect of Auditchain. And I'd like to start right off by just having Jason introduce himself and just a little bit about how you've come into the crypto world and how you found yourself into the space.
Sure. Thanks for having me on, Taylor. I can tell you that it wasn't what I had planned for my life, right? And there are a lot of people who share the same outlook. I was an investment banker for 25 years, and I took a lot of companies public. 2 years ago, we had our biggest exit. Alexion Pharmaceuticals was bought by AstraZeneca. I was the lead underwriter, and there are dozens. But I started my own firm in 2009 during the financial crisis with the theory that we're able to get people for cheap and assets for cheap that you weren't able to get at all a year prior. So I managed Facebook's stock plan, equity compensation plan, before they went public. It was the largest private wealth opportunity in history, and it's also the largest venture capital opportunity in history, because all those kids are now employees 1 through 20 at dozens of unicorns in the valley, some of whom have gone public since. And one day the head of HR calls me and she says, for Facebook, she says, listen, don't panic because we're not changing, but we have a new audit committee and they're washing all the providers. So I'm going to send you the RFP, fill it out, and be here on such and such a date, which we did. And then about a month after they thanked all the respondents, the other respondents, I get a letter from FINRA, the Financial Industry Regulatory Agency that polices all of the broker-dealers. And that was a fishing expedition which started out slow, but it ultimately ended up as a very abusive and hostile process of interrogatories, on the record interviews, document requests. It lasted 3 years, and it drained every penny that we had. And our firm failed as a result. And in the end, my attorney calls me up. He says, come to my office. He says, I'm not going to beat around the bush. You're going to give up your firm. You're going to give up your license. You're going to give up Facebook, and you're going to find something else to do with your life. They want you to sign a settlement agreement by the end of the day, or they're going to file formal allegations. And there's not going to be any winning. There's only going to be degrees of losing. And it's going to cost, upwards of $1.5 million at least to defend. And at that time, I was broke. So I signed the worst agreement I ever signed in my life. I went home and I stomped around my house, very angry and very confused. Because the other thing he said is, we can't prove it, not that it matters anyway. It happens all the time. One of those 6 other respondents likely called in a favor somehow, the respondents to the RFP. So at that time, this was 2014, and the Ethereum paper caught my eye. Mm-hmm. So I fell down the Ethereum rabbit hole. And when I hit bottom, the first thing I saw was accounting, audit, and financial reporting. Because during this process, we produced and went through and audited an independent audit of all of our financial statements going back 5 years. And then when that didn't work, we had a forensic audit done to count every single penny. So going through this provided a signal. Plus, I sat next to the audit and financial reporting profession my whole life as a banker, right? But this really gave me some insights into the use case for this new thing, which at that time, the birth of the ICO hadn't even occurred yet. But that was the first thing I saw. So it wasn't what I planned for my life, but I wouldn't change a thing. So I began writing a paper called Decentralized Continuous Audit and Reporting Protocol Ecosystem. And when I was done with it, I called my system and organizational control auditor who audited my stock plan platform. And I said, Scott, I either need a straitjacket or I'm onto something and I need to know right away. Can you read this and call me back and tell me the truth? And to make a long story short, he became the first member of the non-for-profit Decarp Alliance Association that has about 60 members now. And we're probably a month and a half away from launching the first of a series of components that represent what we believe to be the world's first decentralized financial disclosure and assurance infrastructure. So it's been a hell of a journey.
Yeah, that's
right?
amazing. Yeah, and this is the biggest reason why I wanted to have you on the podcast, because you know, continuous audits are a major thing, especially with it's very timely with the FTX collapse, and I think it's extremely important. And you know, you and I have talked about how proof of reserves is kind of a BS metric, and so that's a big reason why I wanted to have you on the call today. So jumping into my next question, so I was wondering if you could provide a quick overview of the Auditchain Protocol and explain how it differs from other blockchain-based platforms in the finance industry.
Well, so first, there are none that we know of blockchain platforms that are expert networks that provide proof of financial state for an operating entity, right? That's what we focus on. Where it starts is composability for the operating entity. It also starts with composability for a regulator who can create a taxonomy, financial reporting taxonomy. They can amend an existing taxonomy. They can compose report models in different jurisdictions that they prescribe that issuers or reporting entities must use without changing. And then for an operating entity, they can compose their own financial statements, right? Or their financial model, really. Because the goal here is to use the operating entity as a throughput for disclosure information, right? And move the accounting, audit, and financial reporting society from periodic disclosure frameworks to ultimately real-time continuous accounting, continuous reporting, and continuous assurance. So that's our Luca suite. The Luca suite interacts with our Pacioli suite, which is a logic and a reasoning engine that takes derivations, makes calculations. In other words, it reads and understands and outputs an analysis as to where your inconsistencies are, which is everything from syntactical to basic violations of fundamental accounting concepts, which we have so far proven almost 30% of all reporting entities in the world violate some sort of fundamental accounting concepts.
I think the example you gave to me the other day was just balance sheets not balancing, right?
83 balance sheets filed with the SEC for the period ended September 30th this year did not balance.
That is wild. That blows my mind.
So yeah, but the Pacioli logic, reasoning and logic and reasoning engine allows you to do internal testing, right? Which the oversight is internal audit, right? Internal controls. But it also operates on a network so that you can, a network can externally validate and prove the state of an operating entity, right?
Right.
And, people they're caught up in this label proof of reserves, as you had mentioned. Proof of state takes into account the deduction of all liabilities from all assets, not just the custody environment, but everything under the roof of an operating entity. It also takes into account the effect that operating activities has on that end state and applies. We all know it, you know it, all accountants know the accounting equation, right? Total assets minus total liabilities equals equity. That takes into account operating activities. It also takes into account cash used in financing activities and cash received by financing activities in your equity statement, right? So what you have at the end of the day is the proof of stake, but it involves coverage of 100% of all transactions, not just a statistical sampling, and that involves cryptography, right? Merkle trees and Merkle groups.
Yeah, I think that was the biggest concern you started to see with like people being able to prove proof of reserves is it's like, we saw crypto.com accidentally sending funds to geek.io. I
That's
say
not an
accident. I know that I used the quotes accidentally. I think it was like $500 million worth of, and then oh, oops, we sent it to the wrong place. So yeah, you can show that you had that amount in your wallet at that point, but if it came from another exchange that's just fronting that to you so you can prove reserves, it's BS. So I think, yeah, it's an important thing to focus on that, like this terminology, proof of reserves, really is only a snapshot and it doesn't really prove anything unless you have the associated liabilities and the full picture of what's going on under the hood.
All operating activities.
Exactly.
Right?
Yeah.
And lending activities, borrowing, everything that your statement of changes in stockholders' equity requires you to account for is excluded from that, right? Along with your cash flow statement. The other thing about this proof, I don't even want this label that everybody's attached to. If you read these reports, there's all sorts of exculpatory language put in there by the professional services firm. It is not an audit by any stretch. They're not making any attestations, they're not making any opinions, and they're not giving any assurances. And it states in there, you should not rely on this report. Right? So
yeah,
I needed to just get that
Yeah, no,
out.
it's important. It's an important distinction, I think, and a lot of people miss it. So my next question I think you've answered parts of it, but I wanted to get it a little bit more direct is how does the Auditchain protocol enable real-time financial reporting and auditing for businesses and organizations?
So as I had mentioned before, it starts with the integration of your accounting system into the Luca suite, right? So you're integrating your trial balances at the end of the period, whichever period that is. There's a precondition that you have continuous accounting procedures in your internal controls, which means every time a transaction occurs, it's got to be journalized, right? So there are a lot of ways to do that. Large corporations do that all the time, right? Large accelerated filers that have very, very complex internal controls, procedures, and technology that deals with this. But in crypto, you run your crypto accounting system in a serial manner with your traditional accounting system. Because your traditional accounting system, that's where all the logic exists. Your crypto accounting system, the most sophisticated, it scrapes every chain, right? And it allows you to categorize and specify what it was used for, and then it integrates into your traditional accounting system. So your traditional accounting system and your crypto accounting system is equipped, from our perspective, with a provenance protocol, is the simplest way I can put it, which contains a series of cryptographic Merkle trees that deals with volumes of transactions. It deals with the transition from crypto accounting to traditional accounting. It provides a proof of stake from a system point of view that a transaction occurred at the edge, that it was put into your crypto accounting system, that it was put in and integrated into your traditional accounting system, and that it was outputted from your trial balance into your disclosure, our Luca suite, right? Which then rolls it all up into a GAAP compliant or IFRS compliant set of financial statements, which is internally tested, right? Which then gets passed in an encrypted fashion to our, we call it an EDC, it's really a digital audit engagement agreement. And that involves the operating entity in inviting a plurality of auditors who will audit that prior to you publishing it, either on your website or anywhere, or you're one click away. The object is to be one click away from filing with any of the 60 regulatory jurisdictions or 100 regulatory agencies that mandate the use of the XBRL business reporting language, right? So, which is machine readable, right? So you've got a cryptographic audit trail all the way from the edge to the publishing of your financial statements.
Right. Yeah, I think that was that when I first heard, so, obviously I started focusing on this with the collapse of FTX because I saw the need for all of this stuff happening. And, I was reading about Vitalik's kind of proof of solvency and all of this. And I think that the thing that made the disconnect for me of like realizing where this would be able to kind of interact with the fiat world was answered when we had our first conversation, when you started to talk to me about the XBRL language and how you can get this data on chain as long as you are, these companies are leveraging this required language they're already using. So for me, that kind of made it come full circle to where you can integrate what's happening in TradFi with what's happening on chain, so that you can be auditing all of this in real time. So that's very interesting.
It's not only the data, but it's
right.
the logic, right? What
right.
we do is we marry semantics with blockchain and cryptography, right?
Mm-hmm.
And for those who aren't quite technical and didn't quite understand the last 5 minutes, to summarize, we're turning an operating entity into a blockchain, its auditors into its validators or miners, and it's all 4 financial statements into its block explorer, which will allow you to click all the way back through the cryptography to prove each hop in the journey for accounting, audit, and financial reporting information.
Wow, I love the way you put it there.
Doesn't give you invoice numbers or the name of the customers or vendors, because nobody wants to reveal that. That's got, there's competitive stuff with respect, but it allows you to prove financial state that way. And to give you a real clear contrast, the Bitcoin blockchain verifies all balances, all transactions, and all accounts, wallets, all the way back to when the books first opened on January 3rd, 2009. Just to give you, the people who are watching a decent perspective.
I think that's really important, because a lot of the people that will be tuning into this may be kind of just starting to jump into the crypto world and recognizing that there is a big need for accountants and accounting professionals in this space. So I appreciate you doing that, because sometimes people get lost in the fact that it's on chain, and it mystifies things. And I think that explanation helps to kind of demystify what's going on. So just to dive a little bit deeper into that, how can this tech make the lives of accounting and tax professionals more efficient or more effective in their work?
Well, let's look at it from a business strategy perspective first, right? One, I'm sure you do work for clients.
Mhm.
A lot of it's manual, I would
Yep.
imagine,
Yep.
and some of it's advisory. But you can install 5, 10, however many Pacioli nodes you want, right? And the machines do all the work, similar to the way mining and I'm not going to use Ethereum anymore. It's kind of a bad example. It's proof of stake now.
Yeah.
But mining and validation work, right?
Right. Right.
So you can compete for business on the network while you're doing your other manual work and advisory. So that supplements income, right? In addition, the manual work that you do, I bet every accountant has one. It's an Excel spreadsheet that they've had for years, and it contains all these formulas that you pull out for your clients that you use for your clients. You may think they're proprietary, they might be proprietary. The way the formulas work, you may have originated them or borrowed them from somebody else, but you can create controls on the Auditchain protocol that automate that work. Upload them to Luca, and Luca outputs these files, the code base, right? It includes your wallet address, your name as the creator, the metadata that describes the control. You submit it for validation, which then includes the compliance with functional objectives of the control, along with who played a role in validating that control, which validators, their addresses. And then you go claim your NFT. It's added to the library, and when they're used on the network by others, you get paid a royalty. So there's two ways to supplement your existing income. Some accountants, and the goal is to move accountants from manual labor and hourly fees to collecting royalties through accounting, reporting, audit, and analysis automation, right? So, and the thing is, blockchain was made for accountants, yet it seems as though that the accounting profession has been slow to adopt it.
Absolutely.
So, this is really a way. And the other thing is, the more controls there are available in the library on the network, the more society moves from periodic opening and closing books to an open ledger-based society with
Right.
continuous audit, reporting, analysis, and continuous accounting, right? So that effectively you are turning an operating entity into a blockchain, its auditors into its external validators, and its financial statements into its block explorer.
That's great. So, I mean, you've alluded to it in our discussion already, but just to kind of wrap it up, in your opinion, how will the audit chain protocol impact traditional finance and DeFi and the DeFi industries? And what role do you see it playing in the future of these sectors? I know you kind of talked about it a little bit, but what do you see the accounting profession looking like in 5 years or 10 years when this is more ubiquitous and if things
So
go?
look, accountants go to school, they study accounting, they take CPA exams, chartered accountant exams, they do continuing education. What education does not do is suggest that you also take a computer science course. The way we look at an operating entity is we approach it from a computer science perspective because it's a state machine, right? One
Right.
input, in our case, triggers a minimum of 4 outputs: P&L, balance, cash, equity, right? So under a constant state of change, right? When you add a control, you're expanding the number of possible states in a finite machine, state machine, right? So it's hard to say what I think it will look like in 5 years, but you guys have something that lay people, civilians don't have, and that is an intricate understanding of accounting logic, right? So now the goal of the protocol is to mechanize that logic, right? So that when you have an expert network, that means you don't have to be an expert to use that network. So the accountants all move from manual labor to advisory and creating accounting logic on the protocol so that every operating entity becomes a throughput for financial and accounting information and logic in a manner that the average person can read it, right? And understand it. Because right now, if you go to sec.gov, most people don't understand what they're reading when they look at a 10K or a 10Q. That's the average person, right? They're written by accountants and lawyers for accountants, lawyers, and regulators, not for the average person.
Yeah, I remember when I first started my career at PwC, I was tasked with going onto on the Edgar site and reading through those statements and pulling information out of them. And as a first year, it's all just a mess and jargon, and you learn, but it's definitely not easy reading, relaxing reading. So.
And then the next year, they put you on the audit team for a large accelerated filer.
Yeah. Me, I had to cut and run after 7 months. Public accounting at a Big Four wasn't meant for me. But yeah,
there is a brain drain right now. There's a
oh,
lot
for
of
sure.
people, young people who are forward thinking that are moving from the Big Four to protocols in the Valley, especially, or Web3. So I think you can attest to that, right?
Yeah, absolutely. So one last thing I wanted to ask you about was just if you could discuss any partnerships or collaboration that Auditchain Protocol has established and how these partnerships are helping to drive adoption and growth with the platform.
So we're a technology shop, right? We're a construction company that's building a public road with tolls. And we have a non-for-profit association of members of the accounting, audit, financial reporting, blockchain, standard setter, academic, and legal communities, soon to be regulatory. That we haven't really published, but we have a new chair and CEO. He sits on the board of the XBRL Switzerland. He's also the founder of the CFA Society of Switzerland, big with sustainability, and he's taking it from here. He does really well with rallying standard setters. And we have about 60 members that participate with us on various levels to various degrees, from thought leadership to development collaboration. And they have customers. Some of them have customers. And we're going to be publishing an updated website, dcarpe.org, DCARPE, believe. Yeah. If they want to change the name, they can. That's just the name we came up with a long time ago. So, but there's, for instance, there's a few members. MACPA is a member. 8,500 accountants, the State Society of Maryland. We're working on various other state societies, which we'll announce soon. But we'll publish an updated list on our website. I frequently share in some of the groups a brochure that we offer to accountants, especially accounting firms, that gives an overview of the protocol and how the alliance is designed to promote adoption, adopt existing standards and adopt new standards, and promote open source development on the Auditchain protocol.
That's great. Well, I love what you're doing, and I'm excited to see this project continue to develop and hopefully get a validator running up on my end too to earn some royalty revenue on that. You said it was on the Paciola node. Was that the what was the name of Pacioli? Sorry.
Yeah. Luca Pacioli was the Renaissance era first person to document double entry accounting. Yeah.
Right.
So our Luca suite talks, the Pacioli suite listens and agrees or disagrees, so to speak, right?
Cool. Yeah.
But one of the things that everybody should know is that it's obviously there's technical friction in setting up a node.
Right.
So we're partnering with other infrastructure providers right now that will allow you to be 4 to 5 clicks away from operating a node, right?
Wow.
And it removes all the technical friction. Similar to what Infura and Alchemy do for base protocols, will these infrastructure providers do for our validating node.
Very cool. Awesome. Well, thank you so much for your time, Jason. And if anyone wants more information, we'll link to the Auditchain protocol in the description of this video and in the description of the podcast as well. So just wanted to thank you once again, Jason, for your time, and look forward to working with you in the future.
Excellent. Thanks for having me.
All right. Take care, dude.